You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glen Sarvati.
Welcome to another edition of the Big Cast. My name is Glen Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And we're back this week with part two of our coverage of the Finovate Fall Conference, which took place in New York City in mid-September. We've got interviews with the founders of two of the companies that really stood out to me, and I think stood out to others as well, Chimney and Union Credit. So we'll be getting to that in just a second. Want to remind you first, you can always find out more about the Best Innovation Group by visiting our website, big-fintech.com. Go out to the Products tab, and you'll find out about all the cool stuff we've got going on. I'm going to try to be as brief as possible here because we've got a good bit of content between these two interviews. I could go on about the Credit Card Competition Act. I just, watching the football games today, the second Sunday in a row. I'm not sure if they're national spots or local ones, but I've seen two different it might have been the same commercial, but two different commercials in different cities about the Credit Card Competition Act, basically taking the stance of the credit card providers, explaining why people should not want the Credit Card Competition Act to be in place. And although I tend to be more on their side of things, they oversimplify matters, just like the folks who are trying to pass it are oversimplifying matters. And I've seen plenty of coverage, particularly a couple of news stories that I think really play fast and loose with the details as well. It's a complex issue. It really can't be boiled down to a soundbite. That's part of the problem. But anyway, I'm sure there's going to be more of that. At the same time, I saw a couple other articles this week about the death of cash and the death of checks. And, there's some data that you can use to support that. But the broader fact pattern, if anybody wants to make a bet with me about cash and checks going away anytime in the next decade, let's say decade, I think that would be a sucker bet, quite honestly, if anybody thinks they're going to go away sooner than that. But get in touch with me because I don't think it's going to happen. Let me just remind everybody, my ground rules on the way I approach the Finovate conference is, they do demos, 7-minute demos, 66 of them this time around. I never advance schedule any conversations with the demoing companies. I wait because the way I think about it, I want to see which ones appeal to me based on what they do on stage. And then based on that, which ones catch my fancy, I track them down and do interviews. So we had a couple of those interviews last week, and we got a couple more now. Starting off with one of the Best of Show winners. Not only one that I thought it got one of my votes for Best of Show, but also obviously succeeded with a good number of the audience because they got an overall Best of Show. Chase Nienken, the co-founder of Chimney. I'm here with Chase Nienken, the co-founder and chief revenue officer of Chimney, one of the companies that got my Best of Show vote last week at Finovate. And obviously, I was not alone because, Chase, congratulations, you won Best of Show as well. So obviously, there were several other people who had you at the top of their lists, just like me.
Yeah, thanks so much, Glenn. And I appreciate you having me on.
So just to kind of give people an idea of the product, Chimney might give you the beginnings of the fact that we're talking about homes and something you see, from curb appeal and whatnot. I know you compared to some extent your product to enabling financial institutions to have Zillow type information. And this came from your own personal experience when you were looking at your own home ownership and what the banks knew about it, right?
Yeah, that's exactly right. That aha moment comes a lot of the time when you realize that a problem you're facing or that you're struggling isn't unique. And for us, we were trying to answer what should be pretty basic questions about our home. How much is it worth? How much equity do we have? And the process is just confusing. It's unclear. It's hard to follow. You have to go online, you go to Google or Zillow, and you don't know if you can trust these numbers. And what you're seeing is totally disconnected from the rest of your finances. It really makes no sense, right? This is a no-brainer. This is your biggest financial asset, the one that unlocks all sorts of lendings and savings possibilities. It really should be managed in your banking app instead of you having to go to real estate sites like Zillow to get basic information on how much your home is worth or how much you can borrow.
And so your model is to embed this type of information directly into an FI's banking app, right? So that you go, I think the engagement play is clear. I mean, given how much attention people pay to Zillow, if you do that within your banking app, obviously that's more visits there. Do you have any data about how that drives further engagement?
Yeah, absolutely. And on the engagement piece, I like to say, remind everyone of the example, which was still about 15 years ago at this point. When Zillow launched, they broke the internet. I mean, literally, Rich Barton tells us a great story of the day that Zillow launched the ability for people to go online and check how much their home is worth. The site crashed because it
Wow.
wasn't previously possible. So what we're doing is really, giving financial institutions the opportunity to take that kind of addictive experience for homeowners and embed it right within their banking app, even if they're mortgaged with someone else. So that's a crucial part of this, right? 60% or however the recent data will tell you of homeowners in the US or people in the US own a home, but the overwhelming majority of those people have their mortgage with someone other than maybe with their bank or their credit union. So what credit unions really have the opportunity to do now is embed and give homeowners the experience right within their app, even if someone has their mortgage with Wells Fargo, for example.
And the point that you made also that I recall is, obviously this is very important, is people are looking to refinance, sell, buy, kind of come up with a new mortgage, but they're interested in this information on a monthly basis, even if they're not technically in the housing market. So it still kind of drives the engagement. I think you said you also provide monthly email reports to participants as well, the actual users, the consumers.
Yeah, so imagine if you're a homeowner, you can sign up for free through your bank and through your credit union. And what you'll do as a member is you'll get the opportunity to see a home report delivered on autopilot every month that gives you access to all this information. No more struggling to figure out what it's worth and cross-referencing 5 different websites to understand your home value. And what we're showing are not just the numbers, right? The value and the equity that you have, but then personalized offers for you based on those numbers. So it's really a incredible opportunity as a homeowner to get this information on autopilot, knowing that you can trust it because it comes from your credit union and they can deliver this information directly to your inbox.
And it comes to the inbox, but if you are interested in getting it at different cycles than the end of the month or whenever the report comes out, it's always there in the app as well.
Exactly. So we take it one step further than sending a monthly report as well. So all the information sits right within, digital and online and mobile banking. We send this monthly home report, but then we also have a communications endpoint. So all that means for us is that we can trigger alerts, savings alerts, directly from the credit union to their members via push notifications or email. So imagine next year or the year following when the rates environment changes and you're a homeowner that's eligible for a refi, for example, you don't have to go and try to track down how much money you can save. Now with Chimney, you'll get an email that says, hey, the rates have dropped to a point which now you could save $200 a month if you were to refi.
So you've got, you're both teeing it up that there's an opportunity, but we talked about this a bit before we started the actual conversation here, but I realized after your presentation as Chimney, but your company used to have a much more literal name, Signal Intent. And it also impressed me when you had demoed under that name at Finibate a while back. But if someone is signaling their intent to be refinancing or buying by doing some hunting, well, your incumbent financial institution certainly has a great desire to understand that so they can be first in line to make an offer. So I guess that's part of what you're doing here too.
Yeah, absolutely. And, Chimney Home is our second product. Our initial product is a series, a library of financial tools and calculators to help people get personalized information and answers. So something as simple as a mortgage calculator, how much can I afford? Or a savings calculator, how much are my savings going to be worth in 20 years? These types of tools are typically really hard to come by, and people have to go to NerdWallet or Google to get the answer to these questions. So what we launched was the ability for credit unions to white label financial tools and calculators that they can put across their website and within online banking to guide people through this decision-making process. And we have about 55 credit unions now that we work with that have signed up in the last 24 months or so. So we're really excited to bring this new product to market.
So you've got the two different products, and so it's Chimney, and then the other one is called Signal Intent, or what is the other product called?
Yeah, it's Chimney Home. So we rebranded a year and a half ago, and we want a name that was a bit more approachable and really focused on the home and the homeowner, which obviously our Chimney Home product makes that clear.
pricing model? How do you actually go about this? Is this we talk about kind of it's an opt-in for the actual member or the homeowner, or anybody else who wants to get this kind of information. But in terms of the financial institution, are they paying a site license? Are they paying by the user? How does that play out?
Yeah, so first and foremost, for homeowners, it's always free.
Mhm.
Homeowners can enroll in this. They get access to the information and the data for free right within their banking app. And it's the financial institution that pays on a per user per month model to have the enrolled users putting the tier, and then so it's tiered and based on the number of account holders who are enrolled. And that's that kind of chimney home experience where the homeowners are signing up for My Home Tracker. We also have another piece of the offering that's really portfolio intelligence. So these are reports that we can deliver across every one of your account holders, and we can tell you across every one of your account holders who owns a home. We look at competitive intel. We look at predictive modeling for who may be eligible when rates, drop or reach a certain point or threshold. So we have a few different opportunities for credit unions not only to get intelligence, but also to, as you mentioned earlier, create this incredible engagement.
Is that a separate product, or is that kind of part and parcel of the subscription that you're when you integrate and make this offer to your members directly?
Yeah, it's part and parcel. We have the opportunity when someone enrolls also to look at some other liabilities like credit, information, for example. But what's unique and different about property data versus credit data is property data is all publicly available. It's just wildly disorganized and sits in silos, and it's disconnected. So it's really difficult for financial institutions to get a handle on it. So what we like to say is that we've really modernized property data. So it's easy not only for account holders to understand, but also behind the scenes, lending teams and sales teams can get a really good understanding of modern property data that's actionable, that's integrated into their workflows, and even something like speeding up a home equity loan approval because you have verified property data can now integrate into those workflows and reduce them from 3 weeks into 3 days.
And if I'm hearing it correctly, the same way you send out those month-end reports to the homeowners, I don't know if these are month-end reports or if this is a dashboard they can always look up, but you're also providing that kind of information directly to the institution too.
That's exactly right.
So if people want to find out more, obviously, like I say, again, congratulations on the Best of Show. Obviously, this is a very appealing product based on 1,400 Finovate attendees. Can't be wrong. If people want to find out more, what's the best way to do so?
Absolutely. So you can visit us at chimney.io. Also, you can follow us on LinkedIn for a lot of different updates that we post there. We'll be on the circuits in terms of events. So, we'll be on the road doing a road show with some of the events and conferences in the space. And then I'd also keep an eye out. We've got some new partnerships that we're excited to bring to market. We've got a relationship with Circle. We've got a relationship with CU 2.0, both in the credit union space. And there's quite a few new and exciting partnerships and announcements coming over the next few months from the Chimney team.
Got it. Chase Ninekin, co-founder, Chief Revenue Officer at Chimney. Thanks for taking the time.
Appreciate it, Glenn.
So toward the end there, Chase mentions working the circuit. He mentioned the Circle Fund, and he didn't specifically say venture tech, but our friend Nick Evans from the Circle Fund will be here with us next week, talking about the latest, what they've got going on with their strategic investment fund. And he's tied in closely, of course, with venture tech as well. And that will be taking place November 6th through 8th. And I think that's what Chase was referring to. Chimney will be one of the presenting companies. I will also mention that another company that's going to be there that I'm very anxious to see yet again is Virtus AI. We did some coverage of the conference here in Atlanta, FinTech South, recently, and our Innovation Challenge, which had 9 pitching companies doing, again, 7-minute, I take it back, I think these were 5-minute pitches. And they narrowed down to 3, and an audience, or this time it was a judge's vote. We had a real good panel of judges with a great bit of industry expertise. Virtus AI came out on top, and they specifically are focused on providing a personalized experience to the credit union space. Always nice to see, that was not a credit union conference, so it's nice to see the credit union solution kind of rise to the top of the heap there. The other big conference, of course, coming up, Money 2020, October 22nd through the 25th. We'll be there as well. And I've had fun along the way the last several years making fun of their musical guests. They always get a big musical guest to play. It's been Foreigner, it's been Journey, it's been folks like that. I'm actually kind of excited about the one. They did a much cooler thing, in my personal opinion. This is my own tastes. A celebration of the 50th anniversary of hip hop, which you're probably aware of. They've got Reverend Run from Run DMC, Grandmaster Flash, and Spinderella, the DJ, coming up from the early days of hip hop around the 80s or so. So I'm looking forward to that one this time, as far as that. But I'm always looking forward to the show overall. Now let's jump back into our second interview of the day. This one won a different award that was given out. This is a pre-judged competition based on applications in advance of the conference. One of the Finovate Award winners is a company called Union Credit. I believe there were 24 different categories of awards that were given out by the Finovate Awards. But if I had to pick one that I'd be the most excited about, I don't know, kind of like Best Picture, Best Director, whatever, Top Emerging FinTech. And that's the one, that's the hardware that Dave Berger and Barry Kirby, the co-founders of Union Credit, took home. And I caught up with them. And they were also on stage as well pitching. So let's do what they had to say.
I'm here with Dave Berger and Barry Kirby, the co-founders of Union Credit, who just launched their new product into the market in July. And I would say that things are going pretty well and active. Thanks for taking the time to talk, guys.
Thanks for having us.
So, I mean, I saw you on stage at Finovate. I know you won the Finovate Award for the top emerging fintech company. Congratulations on that. And I know you've been out and about. You've got the Union Credit, and I love the fact. I can't believe that somebody hadn't thought of naming a company Union Credit before. You're just kind of inverting things. So that's darn clever. But
we were lazy when it came to naming.
That's 100% Dave's idea, and I thought, Glenn, the exact same thing you did. I was like, "There's no way nobody's ever named their credit union or their fintech Union Credit," and he's like, "No, it's out there." And so. I think most of our success, I would say, is fortunate luck and hard work. So we'll continue to embrace that as long as we can.
Well, one of the things I see on your website that one of your claims is lending without applications, and that's a pretty bold claim. Can you say more about how you do that?
Yeah, sure. I'll take that one. So my first company I founded years ago was called QNexus, and it was founded around the same premise of eliminating loan applications for the credit worthy. If you think about a loan application in the traditional sense, it's a form, whether it's digital or a piece of paper, but it's just got a bunch of empty fields that need to be filled out and turned in so that somebody or some machine can run a decisioning process. And what we realized years ago is that all of those fields that are on those forms, that data is readily available from other sources. So what we do is we based on sort of the old school pre-approval process, the same process that was used years ago to deliver junk mail for credit card offers and such, we kind of brought that process to the 21st century by aggregating data from multiple sources about an individual and using that to proactively determine whether or not somebody was approved or would be approved for a loan product. And then we broadcast those firm offer pre-approvals to folks and give them a very rapid experience when it comes to activating a loan. We call it loan activation instead of loan applications. And that's what we've done at Union Credit here. We've built upon that concept even further to make a marketplace for consumers to find offers and find credit unions that can serve them.
And that was not my next question. As you describe, again, just based on the website, you refer to it as an embedded lending marketplace. I've also seen it referred to in some of the articles about you as the always approved marketplace, which is a clever name as well. So again, if you can say a little bit more about that. So you're basically serving up these offers. Are they already tagged to a specific credit union, or how's the matchmaking done?
Would you take that one, Barry?
Yeah. So the way the process works, Glenn, is we have partnered with what we call publishers. So one of the challenges right now in credit union land is if I said that a credit union was looking to acquire a potential new member, digitally. The challenge they would have is, how does that potential new prospect, how do they know that you exist? They're not coming to your website because, again, they don't know who you are. So the real question is, how do you reach into the phones of those 30-year-old somethings? If you ask them today, they'll tell you, oh yeah, I've heard of SoFi, or I've heard of Chase Bank or Bank of America. So what we do is we partner with national publishers who already have a national presence, a national brand, as well as have their own users. And so what I mean by users is they use the app of that company on their phone.
So like an example of a publisher, who are we talking about as a for instance?
Sure. So for example, way.com. So way.com is an app that you can download to your phone that can help you find EV charging stations. It can help you find parking in a garage, but they have 7.2 million daily users. Experian has a credit score app that can help you track and monitor your credit score. They've got 67 million daily users. So there's all these different apps that people use on their phone, and that's kind of what we do is we bridge this divide. So the way it works is like a Way, for example, way.com is sending us a list of their users in our ecosystem. From there, we are actually pre-screening their users, and we do this on a monthly basis, and we're determining those who are credit qualified. Their information comes back to us. It's a soft hit, doesn't hurt their credit, doesn't even matter. It's an opt-out process, so it's just happening. And then what happens is we are then housing the underwriting criteria and the rate sheets for all of the credit unions that are participating in our marketplace for any and all loan products they offer: a home equity, a credit card, a boat, an auto loan, whatever it may be. And we're applying their criteria to all of those consumers that are returned back from our bureau. And then we turn around and provide back to Way. We say, hey, look, these 7 million people you sent us, 3 million are super prime consumers that have offers from all of these different credit unions. And what happens is these publishers, these partners, are actually marketing our local credit unions products to their users who exist on a national scale. And that happens throughout the entire month. And that process repeats every month. So what we're doing is we're basically taking these large partners, and they're soliciting their users with credit union offers that are firm offers of credit to say, hey, you should check out these firm offers, or you should send a text message and you should check out this auto refi. They can save you money and so forth. So it allows our credit unions to get out of the business of trying to compete with SoFi on a marketing budget, because they can't do it because it's entirely too expensive. And we're basically piecing together a network that's promoting local institutions for better credit to these consumers to provide more of an array of products that are way more equitable to consumers.
And I remember seeing a shop local kind of component to your messaging as well. So I guess, are you matching these up and kind of tying them to a credit union based on zip code or something about local proximity?
Yeah, it's one of the pieces of it. What we do is, let's say a consumer is matched up with 5 credit unions. You can't pay to be the top credit union in our system, whereas almost all of the other platforms out there are that way. Like, they'll pay for the real estate. What we do is we give the consumer the ability to say what's important to them. So if banking locally is important, they can click a button and the most local credit union will show up to them. If it's the lowest rate will populate. So we enable the consumer to drive what's important to them, and then the credit union's presentment shows up from there.
Okay, so before they actually see a credit union name making the offer, you ask them another question: what's your criteria?
Right,
and
correct.
Then it comes up. Gotcha. That makes sense.
So we are predetermining which credit unions they're eligible to join. So we have a member eligibility engine running proactively, so they'll never see an offer from a credit union that they aren't already qualified to join.
Understood. Right. Both qualified to join and that is already standing ready to honor that pre-approval.
That's correct.
Right. So then everybody who has an experience through our system, who clicks on an offer or everything, not only do they know that they're pre-qualified or pre-approved and to join, and for that product, but they're essentially guaranteed a positive experience in a first in their first brand association with that institution, right? Their first transaction with that institution is going to be very, very positive.
Right. Good point. And that was another point that I saw that you made at some point is, helping people regain trust in financial institutions. I think we can say credit unions over financial institutions. I understand how they can have a positive experience. Is that what you mean by trust? Does it go beyond that? Obviously, it's just finding them too, based on what you've said. I mean, like you say, you've got name recognition for the top 20 banks in the country. You probably don't for the credit unions that you're serving up to them.
I mean, so part of it is that positive association, that very kind of stress-free process. But the other piece of it is of the products that, and again, we're talking about the younger segments here, the 30s, 20s, 30s, 40s. They're looking for credit online. That's where they go to look, and they're not being presented today with the best products that are out there, right? It's whoever has the most marketing budget to push their product in front of them. I have a pretty good credit score, and I won't name names because I don't want to throw anyone under the bus, but I received an offer the other day via email for a personal loan, and it was almost 19%. And that's crazy, because I know that through the credit union system and through the clients that we're serving, I could get a personal loan if I needed one for 8 or 9% less than that. So there's a lot of, maybe it's predatory, might be a bit of a strong word, but there is an element of predatory lending going on, even within some of the biggest names in the industry, just by virtue of they're the only ones who can afford to play in the arena where these younger segments are living.
Yeah, I mean, it makes sense. A bigger megaphone, so you can actually get, or share the megaphone with the folks who don't have the money to actually.
And I'll hit on this too, just Glenn. One thing I tell folks is, I mean, if you, and I literally would encourage you to do this, but if you just go to Amazon and type in butter knives, you'll get 240 pages of seriously of retailers that are selling, butter knife, and that's ultimately the experience that consumers should have in banking, but that is not the actual case. So if you Google, just type in credit card, you're going to see the too big to fail banks and the same old tired fintechs that you always see. And they have way more marketing dollars to pay to be in that top spot. And so consumers just take it because it's just there. Yep. And what we're doing is we're saying, okay, credit unions, we know for a fact we can't compete for the top spot on Google. It's just not feasible. But as a system, partnering with these national publishers, we sure can give them a run for their money, to at least open their eyes that there's other options out there that are actually here to help you, and they're way more equitable. And especially in a rate rising environment, you need to be seeing these things.
Yep.
There are economies of scale that we can achieve this, right? And that kind of goes back to the name Union Credit. Obviously, the inverse of credit union. Credit unions exist to help their members through a collective process where they're aggregating deposits and lending them out at a lower rate. Union Credit exists to aggregate credit unions to make sure that we can collectively have this big megaphone from which to shout our better products and services.
Makes sense. Now, do people actually see the Union Credit name, or does that stay behind the curtain?
It's mostly behind the curtain. We try to make sure that it's the credit union's brand and their logos that are certainly most front and center during a transaction or any interaction. That's part of the difference that we bring to our marketplace. We're not underwriting loans and then selling them off to credit unions 3 days later, booking them ourselves. These are, for all intents and purposes, direct loans, right? Yeah. This is the credit union presenting the offer under their brand. And then when the consumer chooses to do business with that credit union by clicking on that offer, we're actually pushing that right into their origination systems, and they're booking the loan and serving that new member directly.
So it sounds like maybe there's a little powered by Union Credit at the bottom of the screen.
Right, that's exactly it. Yeah, I mean, for compliance reasons and such, we have to make sure that our brand is somewhat noticeable on there, but not to nobody's going out there looking for a loan from Union Credit.
Nor are you making a loan. Exactly.
Right, exactly.
Dave, you mentioned your prior company, Cunexus, and I know, Barry, you were there as well. What year did that start? How long were you working with Cunexus?
Way too long, way longer than anyone realizes. That journey initially began in 2007, where I gave it my first shot, and then of course the economic turmoil that
Yeah,
happened.
great. It's amazing how many great companies really started right around that time, and the ones that actually
Right.
got the other end,
Yeah, I ended up, with a day job for a while during the dark years there, but was cranking away in the background on the company. And finally, I think most people started to take notice, and we started getting traction in 2013, 2014, and ultimately exited that company in 2020.
2020. Okay. And I know you weren't any strangers to the Finovate stage. You were up there for Cunexus. I know you won a couple best of shows there as well. But along the way, you've actually, you've sold Cunexus is now part of TrueStage, which I guess has changed the branding, as I recall. But TrueStage is also in turn now an investor in Union Credit. So it's kind of come full circle. Can you say a bit? How did the experience at Union Credit kind of inform what you're doing here with the new venture at Union Credit?
Yeah, it's funny. Yeah, I think I took the Finovate stage 5 times. I wish I could say I won Best of Show. I never did.
Oh, really? I thought you did.
This no, I thought I wish. Yeah, again, I wish I did. I sure as heck practiced my pitches enough, but never was fortunate enough to take that trophy home. But a great experience for me. And in fact, Union Credit, the idea for Union Credit was born out of an interaction I had at it might have even been my first it was my first Finovate 2014. Finished my pitch, got back to the little booth they give you there in the exhibit hall, and a group of folks from Mint came by, and they said, "We really like what you're doing. This seems really interesting, and it's a unique model, and we love that you're working with credit unions, and that you've created this much simpler, more transparent experience. We'd like to partner with you and your lender affiliate network, I think they called it at the time, to offer this to our customers." And honestly, at that time, I had 3 credit unions on the Cunexus platform, and there was no way that I could serve their number of users. So, we shelved that idea for a while, but now, we've over the years amassed a lot more knowledge and experience in our area, but also a great network of lenders, so we can achieve that vision, and that's exactly what we're doing with Union Credit.
Interesting. I'm guessing, I mean, I know you, like I said before, you just went live in July, but you've already got probably 3 credit unions live, don't you? I forget how many you've actually gone into market with. Do you share that number?
We've got about a couple of dozen right now, and then we launched. I think it was July. My dates may be wrong, Dave. I think it was somewhere early to mid July. We were super fortunate. We have a very talented team that just literally works 7 days a week for about 6 months. Honestly, our initial anticipation was to launch in October, and we were fortunate enough to be nearly 10 weeks early on that, which is very strange in our world.
So, I'm not used to hearing that.
Yeah, exactly. But it was actually a really good experience because it allowed us to refine and refine the product and and really kind of fend off what we know is coming, which is we know there are fintech lenders out there that want to be where we are. So we're very fortunate that. I mean, but all in all, really what we're at right now is we've got roughly 100 and give or take, we've got roughly 133 million Americans we can connect with and place them within credit unions. And that's ultimately the goal. The goal is to create awareness for consumers that there are these local institutions, whether you've seen them, just because you don't see them on TikTok doesn't mean they exist.
Love the model. Sounds great. If people want to find out more, I know it's unioncredit.app, correct? APP is your extension?
That's correct.
Well, Dave and Barry, thanks for taking the time. Enjoyed seeing you out at Finovate, and got a feeling I'll be seeing more of you in the very near future.
Awesome.
Very much, Glenn.
Thank you.
So I'm sure we'll be hearing more from Union Credit in the very near future as well. Just to wrap things up, I'll mention again, over the course of the days, there were 6 Best of Show winners at Finovate. There were also, each attendee was allowed to vote for 6. I'll just share with you the 6 companies that rose to the top of the stack for me. Two of them were the ones that we have, three of them actually, were ones that we interviewed here just over the course of the last 2 weeks from the Finovate coverage. Wish, that's spelled W-Y-S-H, we interviewed them last week on the show. And Chimney this week. Those were two of my votes, along with CD Valet, which was the other company that we interviewed last week's episode. We'll post a link to that. Another one of my votes went to True Digital, another credit union-centric solution, actually credit union and banking, to be honest. And we recently interviewed Patrick Sells, who's the founder of True Digital. I'll post a link to that interview we did, which has only been, I think, 4 or 5 weeks ago. Illuma Labs was up on stage with Glen, and quite honestly, of the ones that I voted for that did not win, that's probably the one I was the most surprised did not get an overall Best of Show nod. We've spoken with both of those companies in the past. Glen has been a multiple winner of the Best of Show. Really interesting voice technology solutions. Illuma Lab has their voice authentication technology now baked in and integrated with Glen's customer call center software, which makes for a very interesting solution. And then finally, File, a company spelled again F-Y-L-E, a small business solution for financial management that this is a little bit further afield, but the small business space is so interesting. It's a small business expense management solution integrated with the major card issuers. And one of the things that they mention is, at least according to them, they're the only such expense management solution that does not offer its own card, which in their view actually makes them a little bit more agnostic, which I think is an interesting approach. And I thought the way they were approaching expense categorization via an immediate prompt upon a charge to your phone, so you could actually by text or by app immediately categorize rather than waiting till the end of the period to try to figure out what you did at some point in the past. So anyway, those were my 6. 2 of them wound up making it to the overall Best of Show, which is kind of what I always hope to have happen. I'm not a fan of groupthink, so I like to see that I've got at least some overlap with the audience sentiment, but some of my own thoughts as well. And we'll, as I said, check out our show notes. Wherever you get the podcast, you'll find those, whether you listen on Apple Music or Spotify or wherever you pick things up, or directly at our website. If you go out to the media tab, you'll find all our past episodes, and you'll also find those show notes with links to what we find to be important resources you can track down. Once again, if you are so inclined, check out the Best Innovation Group website, big-fintech.com. As I said, the products tab is a great way to find out more about the Best Innovation Group. Another great way is by following the Best Innovation Group on X at Big Fintech, or our grand poobah John Best at JB Fintech. I'm out on X at 154 Advisors, at 154 Advisors, the name of my firm. And you can find us both on LinkedIn as well. As I said, we'll be back with new content yet again next week as we continue to kind of wade our way into a very busy conference season. Hope to see you out there someplace in the fintech universe as well. And at a minimum, hope to see you again, or hear you again next week here on the Big Cast. Thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.